Hello and welcome. Today is the 29th day of September 2017. My name is Derek. Welcome to the cryptocurrency video for today, taking a look at the more common cryptocurrencies as well as Pinkcoin. Bitcoin first on the list. Everything you do is within your own risk and own reward. I'm just pointing out what I see and how I read the message of the market. And one of the things I've talked a lot about before were the failed moves, where in the Bitcoin case, it would break down some key support levels, regain towards its congestion area, or more importantly, within the 18 average relatively quick, and then quickly thereafter break out above the 18 average. And that's a very bullish pattern in itself when you have a significant drop below the 18 and then you have a clear break out above it. And a clear break is nothing more defined than the eye test see it's well above. For example, this was not a clear break. And now you're controversially saying, well, is this a clear break? Maybe, but you know for sure that this is. That's the whole point of when I say stuff in that kind of nature, clear moves kind of deal. Now, as far as this in here, you know what? That to me would classify as that of, yeah, it's a clear break above the 18 average. It's enough to make it so that it's now been rising for a couple days in a row. So that's good to see. I also like today's action and seeing how price action came near the 4,000 handle or towards the 18 average of highs, and now a couple of days since the statement. Oh, yep, going to revert the trend by breaking out above it. Okay, roger that. And we roger that by just doing nothing, waiting for the buyers again to come in for the next move. Markets go up, correct sideways, and then have some decent gains. That's something that, of course, is one of the methods. But I do like how this is starting to transpire towards the upside. On the 4 hour time frame, this is a situation where I've talked about this like cup and handle formation, but regardless of the fact, this level or neckline of resistance, which the upper end of it would have been in here at about 4,100, and the lower end here, basically around 4,000, 3,970-ish. And that's exactly where it came down to in here. So we've had the short term first time coming back to where it came from, and that's when you break it for the first time with one leg, have its correctionary move, and it's looking as if it's making that higher low, and the buyers, of course, in control of this market right now. Let's move this onto a weekly chart. And within this bull market, every single time it has left the 18 average, even when it really wasn't much of a bull market in here, it has had some good gains. You break this resistance in at the 310 mark up to, yeah, it looks like about 500, so not that shabby. Break this resistance, and we can see this gain in here, comes back to the band, it leaves the band, a nice little gain in here, comes back to it in here, a satisfactory gain to say the least, comes back, better than satisfactory gain, and based on this move from this point here, well, this was a satisfactorily good gain, and now we've got this bottom, and it's just leaving this 18 average. So the trend every time it has came down to this point, you got two red candles down, it lifts higher. You have a decent one, three sideways, big red down, it goes higher. Here, three red candles down. With the first one, we can see more clearly that it had a good move, came back, but ultimately would sell off, retest this low, go a little bit further. Two red periods down in here. This is a situation where it went down in one period, corrected for about 5 or so weeks, and then a couple red moves weeks down. This was just, well, this here you can see was just one period. This happened after the day, but that has been the trend so far on the weekly time frame. And if you look at how well mathematics has been for going long after it's had a clear break, Again, what do you define as a clear break? I'm not saying this was a great play back in here because market conditions of the were different. But again, buying at 300, there was definitely gains in play. Here, you could say clear break was maybe somewhere around 525, 530, straight up. Here, you got a clear break somewhere in here, good gain. Clear break right around here, good gain. Clear break pretty much on this green candle here, but break of the resistance anyway, right in here. And then, of course, the final one, the clear break above the 18 average of highs, and the resistance was in here. So for me, a clear break of the 18 average of highs hasn't happened yet on this time frame, but it's getting close. I mean, it is barely above it right now. But it is looking to make it towards that mark. So I would have to think 45, 46 is where you could really notice that this thing could continue on with decent moves higher. And 6 minutes 8 seconds. Let's continue on a bit and then move on to the alt charts. As I stated, probably be a 20-minute video on the 2.5-minute warning. At least no, if I didn't. I was gonna say it was gonna be a 20-minute video. I had like 4 takes this morning. I only took one of them. Anyway, this will be about a 20-minute video, as if I need to tell you that. You can see the duration on your screen. The web bots were talking way, way, way back when, and I'm trying to think of when it was. I'm guessing it was even pre-2000 time frame. That the 13,000 target for basically sometime in the winter, late winter of this year, was going to be the level. And you can think of how outrageous that prediction number would be if you're talking about $2,000 Bitcoin. And it might have even been closer to 1,500. I can't remember when he released that information. With that being stated, though, is the market moving in a direction where it could get to that level in a reasonable amount of time? If we're talking late winter, and currently we are in early autumn, then that would mean 5 or so months from now. And how many weeks is that? That's about 20 periods. So for that to be the case, you would think that you would continue this with a leg higher. And most likely this would transpire a lot like these previous ones have. You leave the 18 average and boom, 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 just keeps on chugging higher as the most probable event. So then I think he mentioned again something about, I don't know, like a 7,000 high that would come up later in like October or something. Okay, so let's assume it goes to 7,000. And that would be, say, sometime before Halloween. So maybe sometime closer to Thanksgiving it would bottom. Or so maybe it goes from 7,000 back down to 5,000 maybe, or 5,400. And that would take us to late November. And at that point, I'd be saying the same thing. Oh, it's back to this 18 average low and all that kind of stuff again. But if it was to, say, take December, January, and February, go from 5 to 13, you know what? That could very easily be a possible scenario when you look at even some of these one-leg moves. Because leg one, well, I can't say leg one because this is like leg 5 or 6, but under 1,000 to about 3,000, 3x gain. 1,800 to like 5,000, 3x gain. 13,000 divided by 3, that's 4,000 and change. You know what? A lot of those numbers are actually making sense to me, but the buyers, again, in control of this market. I don't see any reason right now why I'm going to put this to any reason where, okay, this is in bubble territory. I have to get a good exit strategy. That is not my position. Let's go on to some of the other coins. I'm going to go to Pink Coin, then I'm going to do some other ones after that. And when I'm doing these charts, I'm really just trying to explain how it is that I read the market. So if I'm showing whatever type of codes and you're looking at something I've never talked about or I rarely ever talk about, maybe it can help give you a little bit of idea towards it. But you look at something, what are the things that you notice? And within such, you think of stuff like volatility. How much is this thing moving into how big of levels? And I look at volatility in two facets. One is how far as how high the highs and lows go, and then how the swings with them work as well. And in a situation within this, we see how it had bottom periods in at around 300, going up to about 1,000, 1,100. So it's okay. I think it's standard run of the mill playable volatility. And the volatility of this crypto land, crypto space is monstrous to the point where I believe truly, and it's really, I think it's mathematically true that the amount of moves, the amount of volatility that, or the percentage that changes that occur, say, in a day of crypto is the equivalency of like 7, 8, 9, 10 days on the traditional market or some large number differential. Because you don't see too many stock codes making these kinds of moves to these type of natures like the crypto spaces are doing. With that being stated, of course, when you talk about margin trading, that throws another whole loop curve into the mix. Don't want to go there. Okay, so other things that I see. This resistance level, it's came back to where it has came from. So if you were looking to be a buyer after this move, because I don't want to be buying when this is just going straight up like this. Not even, never, not even maybe, no. But when do I want to buy? Well, I want to have at least some sort of decent correction, either by percentage move, but 1,100 down to 800, we can see that was not that good of a percentage number. Not in this case, other than a start at dollar cost average into better prices. Maybe you wait for a hit of the 18 average of highs. In a spot here, if you were to wait, you practically have had no chances to sell unless you went for this small swing trade the next or 2 days later. Nothing there. Now 18 average of lows. Buying in here gave you one chance to sell on this green candle higher. And then of course other places to buy is where it came from. And so far that has transpired. Also, you want to wait to have a better bullish sentiment maybe. Okay, so it's came down. I want to see maybe a move like this, which is perfect, come back to the bed. And you know what? Maybe for some people, me not included, I'm not this way, but some people might rather wait to buy in here for the price, like I say, to come up here, fall back down, and then make a break over that key established resistance because they realize that this correctionary move is legit. At least that's how they'll perceive it. And price action should at least go to these previous high areas and maybe even take it out. All right, so let's now move on to some of the more key ones. Let's go to Litecoin. And on the daily time frame, it has been in a very long sideways consolidation pattern. It's a little bit below the halfway point of it. If we take a look at the range number 10, this is the sideways movement. So it's, yeah, lower than half. Half is somewhere around in here. And this thing, when they're ready to go, they go. I've said that with so many cryptos as far as swing trading it, different era. I mean, yeah, you'd have to, I would think, wait a little bit to be a buyer back in here. And you'd, again, sell at the upper ends. But right now, there hasn't been too much when the markets have been having these small green candle sizes to do any trade. So what I was mentioning on Pink about volatility, there's the two measures. One, how big are the moves overall when you look at like point A to B, but also how much of this are you getting, where you're just getting the tiny periods that hardly move. And when you get them, which has been the case, it makes it very difficult to be a trader within it. Let's move this to the weekly time frame. And it's definitely a wild moving market so far. And since this Coinbase adding it to the exchange, and we've seen volume diminish, which makes sense that happens on after big up and down moves, but the volume is still relatively high, at least in comparison to before. Price action is showing that sideways correction more. And maybe you can call this a little bit of a bull flag. And a key point about this is how is it going to digest the gains, if you will. And it's done so by currently holding into that one number. With that being stated, what's going to happen when this sideways consolidation pattern finally breaks to one side or the other, given the history of the market? If it's going to go down, do you think it's going to go down more towards of a nature like, say, this, or like, say, this? And my answer would be closer to this, is in larger red candle periods. I mean, the size of these moves are big in itself, so it wouldn't be surprised if there's a down move where you could literally have like a 50% drop from the 0.01 to 0.005 handle. That wouldn't surprise me, just like it went up so fast. Law of polarity, same thing true on the upside. Whereas you break around this 0.022 mark, it could easily shoot up past this 004, 005, or single 04, single 05, single 06 like no other. Wouldn't be a surprise, because when these things are ready to go, they just take off. 003 here. I mean, this was a 7, 8x gain in itself like no other. And I don't know how long it's going to take. I thought it would have happened by now, but not the case. And let's move on to the next code. And that will be Ethereum. And on the same time frame, the weekly chart, we can see this very small rectangular move. I haven't been covering much Ethereum because it hasn't really been doing anything. I forget that I even own an okay, not too large, but an okay size amount, because I don't seem to be doing any buying or selling of this right now, because this is like hardly even moving at all. But as far as markets are concerned, has it came back to where it came from? Yes and no. This is where it came from. Here's the yes. That's the original breakout. So when you originally break through support, what you expect is that you are going to have just a small leg higher, come back to where you go, and then break it, yada, yada, yada. It did that. Now, there's no guarantee it's going to come back again, but it definitely is an area I would be looking if it's going to break below here. We're at the 0.07. This is 0.035. That would be a 50% reduction. To me, that's the most probable area it's going to go if there's going to be any serious breaks above it. For it to get bullish on this time frame, it needs to have this move get over the 18 average of highs as a starter. And for 1, 2, 3, 4, 5, 6, 7 periods in a row since this one, it hasn't even been close to touching the 18 average of highs. Even here, it wasn't that close as well. So it's been riding this 18 average of lows like no other. That doesn't necessarily mean it's going to break down. Let's move this over to the daily. We can see in here that there's a beautiful bull market up to the top into June. And then the significant leg lower, making lower highs and lower lows. So since this point, you've had 1, 2, 3, 4 tests of this area. And it looks as if it's approaching a 5th test soon, as far as each of the highs that have been manufactured. This one from this low. And then it does a couple of these from this low. This low, it hardly gets up at all. This one, it does a bit better, obviously getting above this point, but staying below in here. And the overall trend within it is, again, bull market down sideways. You got to make some downtrend lines. It's got a long ways to go to show some bullish reaction. that even if you get some rallies up to these points in here, I'm still going to be cautious that it's going to be continuing the range, because as far as I'm concerned, the range upper end of the resistance of it is up towards this 90 handle, although it hasn't been there for quite some time. Monero I bought this morning, so I know it had a down move itself. And we can see on the daily that it's been correcting this upwards move a little bit, grinding its way lower. And today's low is, well, levels not seen since this point in here. This area has broken through key support. Where did it come from last? I'm looking right now in at this 20 handle. This is a mark that was resistance all through in here. It's a psychological even number as well. So to me, it looks as if the market's going to be making a move down towards this level, which means for me, I'm going to have buy orders at much larger number sizes compared to what I bought today, and at the 0.02 mark. If that doesn't happen, I mean, this is a situation where, even though I bought today, that's not the play. The play, I look at it as a sell, because of the notification that it has broken below this support, which was established first in here. And then after yesterday's down move, it didn't do what it's done every other time it was at this lower end, and that is go up to here. It's had another significantly, or right for its time anyway, down move. And let's look at the volatility in its holes. You can see in here these large green candles moves higher, and then some follow-throughs that are smaller to its size but still big. And then in here it's just tiny compared to this, and even some tiny ones in here. And even after each of these moves, you can see you get a lot of the tiny ones when they settle down, and that's what these markets do. They're going to have some explosive moves every now and again, and when that becomes the case, then the follow-through is always going to be the same. And then when things do go through correctionary moves like we seeded here, it just makes it, again, difficult to day trade when moves are idle. Thank you for tuning in to the video, and have yourself a great day.